I went to the Innovation Summit yesterday, and it was one of the most inspiring conferences I've been to for a long time. And it left me with a real understanding of what the National Broadband Network and innovation can actually do in this region. And so I want to hold that in my mind as I present this information to you of quite a subdued economy, because there are different ways of looking at an economy and a community. Of course, I'll be showing you a whole lot of graphs which paint a certain picture, but I've also been going out as part of my doctoral studies and part of monitoring the innovation plan and speaking to some really amazing people in this region and the businesses that they're running and the value they're creating. So this is one side of the picture. It certainly shows things that we need to look at moving forward, but it's not the full picture. Because I'm going to take you through what I'm calling the village, or the global village of uncertainty. I haven't been there literally, in the flesh, but I think we're all familiar with that global village of uncertainty that we're effectively living in at the moment. The lack of confidence in the future is one of the hallmarks of the past few years, certainly since we had the global financial crisis. And everybody is still talking about, oh, what about the potential of Mark II? Is it going to happen? I saw people throwing Molotov cocktails on the TV the other day in Greece, and I must admit it gave me a bit of a fright to think that things have gotten to that in a part of Europe that we've long considered a very stable part of our world. So certainly that does elicit a certain level of uncertainty, but most commentators are saying that Europe's going to muddle through. But the dependence on debt underwritten by subprime securities has shaken the system. And it's made debt deleveraging, so saying, okay, I'm not going to spend, I'm going to save a bit more, something that household and businesses have been increasingly doing. A couple of Saturdays ago, I don't know if you saw it, but the Sydney Morning Herald reported on the everyday worries of Australians. I read it with some interest because we do research at the Foundation into Wellbeing, and it highlighted the importance of work and career. First and foremost, people are concerned with having work. We all want to be able to get up every day and do something meaningful. And that's not always paid work, it can be a variety of other things, but for many people it does involve getting a job. And the HVRF's wellbeing research supported this by showing that people who are unemployed had much lower wellbeing than people who were in work. And also those who were really satisfied with their work were likely to have higher wellbeing scores. So locally, this is a real issue for the Central Coast because the concern is magnified where we have job insecurity, principally because the region isn't aligned with the resources sector, like, say, for instance, many other sectors in regions in Queensland and particularly Western Australia at the moment. So it's a concern that probably a lot of people in the region are experiencing. And we're also going to see that we've had a growth of part-time work and the casualisation of the workforce. And alongside that, we've had house prices slowing down. How many conversations have you heard about the great Australian dream, the house that you buy with equity continually increasing, gradually not so much there anymore, as we've seen a bit of a flatlining happening. And so that traditional form of wealth creation isn't as reliable as it used to be. Underneath that, we've got the continuing policy debate about environmental issues. What is going to happen in 2050, 100 years' time? What's going to happen to our suburbs? I was just speaking to a councillor a moment ago, and it's a real issue for local communities and economies. So we've got that uncertainty. And I was saying about the Innovation Summit yesterday, truly inspiring to be there. Technology certainly has so much to offer our communities, especially a community like the Central Coast, but with it comes change and fast-moving change, and that certainly brings its own challenges. And then, as I mentioned earlier, we have that global volatility. So the global village of uncertainty is certainly very well populated. And so to explore where the Central Coast fits within this maelstrom, we'll have a look at the data on local conditions within the macroeconomic context, because we can't really see one without the other. So firstly, I'll briefly review some indicators on the wider context and then go on to look at the region's labour market, what consumers are doing, what businesses are doing, and then have a brief lead-in to the conversation that other speakers are going to be following on with this morning about innovation. So we'll start with the macroeconomic context. And I think we're all probably aware that the resources boom is currently one of the major influences in the Australian economy. It's very hard to get away from that pervasive talk that we have about the way that it's making us the miracle or boom economy. Regions such as the Central Coast that aren't significantly aligned with mining or the associated manufacturing benefit indirectly through factors such as the favourable terms of trade that mean that imports are cheaper, and certainly so are those overseas holidays, but it puts a lot of pressure on local businesses through the high Australian dollar, through those relatively high interest rates, which have been coming down but are still relatively high compared with international standards, coupled with that consumer conservatism, so that overall we get a picture of a region under pressure. Now here we can see thermal coal exports in tonnes, those are the bars on that graph, and thermal coal prices, which are the line, with actual figures to 2012, and then the lighter bars are projections out to 2016. And you can see the current robustness of demand, and you can see that expected continuation out into the future. But you can also see with the black line that moderation of prices that is expected as global supply is currently expanding. So what this means is that the resources sector will continue to be a significant driver in the region, but it won't last forever. You can see on that graph that there is a horizon. It will remain an important part of our economy for many, many years to come, but maybe the boom will just come off a little bit. So for now though, the heat in the resources sector is there. And even though there have been capacity constraints that have been really affecting that sector and pulling it back a little bit over the last 6 to 12 months, it is something that is going to really underlie our fiscal and monetary policy for the foreseeable future and see relatively tight setting in those areas, simply because we can't afford to let the rest of the economy overheat when we have such a strong sector there. And this is where we can see the impact on the Central Coast, where the yearly average employment data to February 2012 showed that 3 industries which are really heavily influenced by consumer sentiment and discretionary spending are a big part of our employment makeup. That's retail, construction and accommodation and food services. And we've also got that trade-exposed manufacturing sector here as a very important part of our local economy. Now, I know those numbers jump around a bit, and there's been a bit of a dip last year and it's come up a little bit, but it does show that there's volatility in manufacturing, and certainly it's a sector under pressure. And this national data on the annual change of household savings ratios for the 30 years to June 2011 shows why that dependence on discretionary consumer spending is a problem. The savings ratio basically has been increasing quite sharply over the last few years, and that's largely due to our membership of that global village of uncertainty that I was talking about earlier, and they give rise to that household debt deleveraging. So the Central Coast is a symbol of the nation's conundrum, the miracle resources boom economy, but with a wide divergence between those who dig and those who do not. So let's have a look at where that leaves our labour market. In March 2012, employment numbers actually increased by 11.1% compared with a year earlier, in contrast to the position in the state and nationally where actually there was a slowing of growth. And what this does is show us the different gears of the economy. In the Central Coast we had a dip in 2011 and we came up again in early 2012, probably largely due to that monetary stimulus that we got with the dropping of the rates in late 2011. While at the same time we're coming up again, the nation is slowing down because of those capacity constraints in infrastructure and labour that they're experiencing. But overall we can see that there was an upward trend in employment numbers over the past 3 years, so that's a really positive sign for the region. And this was accompanied by some of the most positive data regarding underemployment for part-time workers for the same period, with part-time workers reporting that they were actually working more hours than requested. And we can see that that's a big turnaround on where it's been in the past. So structurally that means that the labour market isn't looking too bad at present. And there was also a slight downward linear trend in unemployment over the 3-year time frame. In March 2012, however, we can see here that it jumped up again because participation jumped up. And so you see those structural constraints in the economy. As soon as we have a slightly more buoyant labour market, people start thinking, okay, well, that means I can come off not looking for work and start looking for work again. Participation goes up, and then we see a jump in the unemployment rate. So it's now actually 2 percentage points above the state rate and 1.4 percentage points above the national rate. And this really highlights those structural issues that I was talking about. But as I said, I was at the Innovation Summit yesterday, and there was really inspirational discussion of the way that the national broadband network may ease this regional problem. Increased connectivity will broaden the opportunities for many, coupled with an emphasis on increased education and skills, because ultimately if we have increased connectivity, that's a great thing, but it has to be combined with a good skills base. But it may be one of those things that helps us flip over that equation of that structural unemployment. We can see here the downward linear trend for long-term unemployment over the 3-year period, and that's a really key positive for the region, because one of the characteristics of the local population is that there are a significant proportion of disadvantaged people here. So the more we see that long-term unemployment rate coming down, we have a change in our social fabric and our economic fabric. In March 2012, we can see that participation increased, as I was mentioning earlier, and that forced unemployment upwards, but over the 3-year period, it declined slightly. So what we have here is actually, in some ways, it looks good because it contains our unemployment, but it's effectively a structural break on the economy because we don't have as many wages and incomes driving expenditure in the region and driving wealth creation. And that's partly a function of our older population, but it's also a function of the jobs market generally. And it's a factor which is exacerbated, as I mentioned in the introduction, by a slight decline in full-time employment over the 3-year period and an increase in part-time employment. So most of those increasing employment numbers that I showed you at the beginning were actually in part-time employment, and they were in sectors such as retail, construction and hospitality. And this can lead to uncertainty of income, especially when it's casual, because you get people really not knowing whether they're going to have a job the next day or not. And the ACTU commissioned an inquiry into insecure work, and this has really highlighted many of the issues that are also economic issues for the region, because they lead to, casual work can lead to an inability to lend and get credit, to accumulate superannuation and to plan ahead. So this is definitely a regional and a national issue. So summing up on the labour market, there were signs of some recovery in employment numbers in the first quarter of 2012, but still relatively high unemployment. The participation rate is about 5 percentage points below the state rate, and the region has a relatively large and increasing proportion of part-time employees. And looking ahead, we can see here the hiring expectations are positive but still very conservative, with most businesses reporting that they're really just intending to maintain their current staffing levels. So looking ahead, uncertainty does seem to be really dominating what's happening in the labour market, although there are some signs of buoyancy. So now we'll look at consumers. And this chart takes us back to that initial discussion about uncertainty, because quite simply, it's what it shows. Residents in the Central Coast were expecting to decrease their spending, you can see that here, in the next 3 months. And they were also expecting the regional economy to worsen, it's just below the line there, for the next 3 months, with the indicator for the next 12 months in slightly more positive territory. And that's usually the case. We have the 12-month line above the 3-month line because of people's inherent optimism in the 3-month period. They think, well, I pretty much know what's going to happen, but I'm hoping that it's going to get better. And these were taken before the May interest rate cut of 50 basis points, which is going to have a positive impact, and hopefully we'll see some bounce there. And also that fiscal package in the budget for lower income earners, which may provide some stimulatory effect. It's unlikely, though, I think, that we'll see a major turnaround with those other underlying issues at the moment. And we can see here, however, one of those upsides of the high Australian dollar and the currently strong terms of trade in the positive annual change, which this graph shows, in passenger motor vehicle registrations. Motor vehicles haven't been cheaper in Australia for a long time, and people are going out and buying them. And we can see that perceptions regarding future expenditure that's going out and buying a motor vehicle are still high. You can see that bar there above the expectations in many of the previous years, and also expectations about going and buying a holiday, with probably the likelihood that for local people some of those holidays are going to be out overseas because of the high Australian dollar. So it's not all downside from consumers' point of view. But turning now to the housing market, which really does remain subdued, with negative annual change in the value of approvals in the region for the last 5 quarters. Now, in the early 2000s, there was a housing boom. We had rising approvals, we had rising prices, and a lot of activity in that sector. And there was positive annual decline in approvals for the first time in December 2003. And since that time in December 2003, there have actually only been 9 quarters in that whole period where there has been positive annual increase in building approvals. So that indicates that that boom has really come off in the region and in the state. One of the recovery periods of 5 of the quarters where there was increase was in that post-GFC recovery period. And the decline in approvals has actually come in the face of annualised population growth in the region of about 1.1%, with tight lending by overcommitted banks and the negative direction of house prices, which we can see here, compounding the problem by reducing return on investment, eroding homeowner equity and reducing confidence. As a result, housing investment is no longer that really reliable route to wealth creation, as it has been for much of the decade. And basically, economies like ours in the Central Coast need to reorient. And many regions have done this through their connection to the resources sector. But for those without this connection, we're going to have to look for some alternative driver for economic growth and increases in productivity within the industry base. And the innovation agenda is all about creating this alternative driver, seeking the opportunities and pursuing them. There are also indications that affordability constraints may have been reached in the rental market, with growth slowing during the year to December 2011. So affordability remains an issue in the home buyer market. We've got those high interest rates, we've got job insecurity, and we've got the withdrawal of those last measures of the fiscal stimulus, the stamp duty exemptions, etc. But it's also now coming through into the rental market, which was really robust there for a while, but I think we can see the brakes being put on there. I think that the easing of monetary policy will make a difference once again, and also that underlying demand in the housing sector, so that in the absence of any external shocks, we'll probably just see things going along fairly steadily in the foreseeable future. But turning now to business indicators. I think this is probably the most important graph that I'm going to show you today, and it shows that profitability and trading results reported by regional businesses have been declining for much of the last 10 years, with record lows for the period recorded in March 2012. So what this shows is the generally challenging conditions that the region has been experiencing for quite an extended period of time. We've got increased global competition, more constrained and expensive credit, a weak labour market which leads to reduced and constrained spending, and they will have all played their part in where profitability and trading results are going in the region. And then there are those underlying issues about investment in assets, research and development and innovation, and underinvestment in that, which has also been the case nationally, and which nationally we've probably seen feeding into that multi-factor productivity decline. We can see reflected here the cycle of what some call, and we heard at the Innovation Summit yesterday, that cycle of creative destruction, where nothing is static, and certainly businesses aren't static, and the businesses that survive will differ as conditions change and their ability to respond changes. So I think somebody mentioned yesterday that nationally the turnover of businesses, the business cycle, has been about 10 years, where you're surviving for 10 years and then you have to completely reinvent yourself. So I think moving forward, it's going to be those businesses that see the global market as an opportunity rather than as competition. Those are going to be the ones that ultimately come through, and also the ones that are seeing the need to have a customer-centric approach to everything they do in terms of their service delivery and things like that. They're coming through as a few of the trends that businesses really need to be embracing to survive, and obviously what the region needs its businesses to do to turn some of these structural issues about declining profitability and trading around. And more specifically, we can see here that there's also been a bit of a downturn in regional tourism, because overseas visitors numbers, actually, if you look at the graphs, aren't that bad. People have still been coming to Australia, but it's the domestic tourism. A lot of people who perhaps normally would have holidayed in the Central Coast are going overseas because of the high Australian dollar at the moment. So in addition to the factors that I mentioned placing pressure on businesses generally, we've got the macroeconomic factors placing pressure on really important businesses like tourism in the region. But we can see here that never-ending optimism. Businesses are continuing to indicate, our surveys show, that they will increase their capital expenditure despite the poor trading and profitability. Given the structural change occurring in the economy and despite that uncertainty prevailing in most markets, this is crucial for the region. The continued quest to define competitive advantage, to discover what we do well and keep on doing it. Other indicators of business investment, which I'm going to show you now, reflect the challenging regional business environment. We can see here commercial vehicle registrations, which are a good indicator of businesses' willingness to invest in large items. They're fairly sluggish. And non-residential building approvals, which are about capacity building in the region, were also sluggish, but slightly more robust in the 2 quarters to December 2011. And finally, the uncertainty factor reasserts itself through these results, which show business expectations for the regional economy in the short and medium term. So you can see they're fairly subdued. So looking ahead, innovation and productivity growth will be key factors for the region and the wider economy. And our research shows that a consistently strong percentages of local business are involved in developing new products and services. Now, that's just one side of the innovation equation. You can innovate by changing your organisational structure, by creating a subsidiary with a lower cost structure to perform certain functions. You can innovate with how you market, how you collaborate, all those sorts of things. This is just about goods and services, and we can see that we've got a fairly lively innovation culture here in the region. Fiscal policy settings, particularly expenditure on key infrastructure and human capital, will be integral, as will strategic settings which ensure that in the rush to secure cost savings, we don't outsource our key innovative industry base potential. So sometimes when you say, okay, there's a cheaper way of doing this, we can outsource this to China, there's a danger nationally that we lose some of that productive and innovative potential. The Central Coast Research Foundation is actually carrying out some fairly in-depth research on innovation in the region. And we'll continue to report to you on what's happening. As I said, I've been going out and interviewing people, and I think that's where you get a really deep picture of what's occurring. And on Monday, we'll be going out into the field with a region-wide business survey about innovation. So I'd be really delighted if there are people in business in the room and they get a call from one of our interviewers that you'd participate in that survey, because it really helps us understand what is going on. So in summary, the labour market has slowed and generally it's been subdued, but it is showing some signs of buoyancy in early 2012, which is a really good sign. But we do have those underlying structural issues. The housing sector in the Central Coast is very subdued, but recent interest rate cuts are likely to underpin price stability. Consumers are conservative and uncertain. Business indicators show the impacts of structural change on the regional economy and the need to invest in that capacity building. And investment in natural, manufactured and human capital that underpins innovation is really vital moving forward. So thank you very much.